So I've got my baseball outfit on. I want to talk about prepaid expenses, unearned revenues. Two very important topics in accounting, two adjustments that are very important to understand. And students and a lot of people out there in the business community, when they learn about accounting, this is an area that is very much misconstrued. I want to make sure that we demystify it, make it a lot simpler. It's really important, and when you start seeing that's a lot easier is when you look at both sides of the picture, and this example will help with that. So let's say that we're a business in New York, and we go to the Yankees games. We buy different tickets. I'm not a big Yankees fan. Maybe some of you out there are. Some of you might not be. But we're just going to assume Yankees, right? It's it's a team that a lot of people are fans of. So in New York City, Yankees fans, we're a business, and we're going to purchase season tickets. Down at home plate, really good seats, few seats, so we can bring it to our clients, have some of the people from the company, have a good time, all that good stuff, talk about business. And these are expensive seats. And we're going to spend, let's say, just using a number, you might think it's ridiculous, we're going to spend $50,000 for a whole row of seats for the game for the whole season. We're going to spend $50,000 for a whole row. We're prepaying that for the whole season. Well, to us, that's a prepaid expense because that's the expense of advertising, of getting our brand out there, of talking to clients and whatnot. So it's a prepaid expense. It's an unearned revenue to the other side, the New York Yankees. Why? Because to their organization, they receive $50,000, right, of unearned revenue, but they still have to perform. They have to provide games. They have to provide the actual games that we go to for the season in these seats down these great seats down there at home plate. So the idea is that it's a prepaid expense to one party that's an asset for the future, right? A future resource or future benefit, but it's a liability to the other party, the unearned revenue portion for the New York Yankees, because they're receiving this $50,000, but they have a liability on their books, and the idea there is that they have to perform. Now, every time a game occurs, you can think of it as a little bit of that asset has gone away because it's no longer a future benefit. So for our business, where we are buying the season tickets, every game that we go through and we go to and we get those tickets and go to, we now have less of an asset on our books because there's no future, right? It's been used. It's past amounts have been used up. And as we keep going to the end, right, the asset stays on the book, prepaid expense, prepaid New York Yankees tickets. Those stay on the books, but they'll go away at the end of the season. On the other side, New York Yankees, they have a liability for the full $50,000 at the beginning of the season, but as they go, that amount is going to go down because they have less they're liable for that they have to perform on. Less services, less games they have to perform on. And as they go into the future, that liability will go down, and therefore, when they get to the last game, after the last game, it'll be zero because it's all been served. The service, it's been rendered, or the goods have been delivered, however you want to think of that, right? I think of it more of a service. You're providing a service of allowing people to go to your games with all the, of course, atmosphere and the great entertainment and what's going on. So, again, to recap, we got a prepaid expense to the business, that's us, $50,000 for these seats for the season. We spent $50,000. We've got these tickets for the whole season, $50,000 at the beginning before we go to any games. As we go in that process, we adjust for the games that we actually take. That's the adjustment process. Now, of course, we do adjusting entries. We do adjustments at the end of the accounting periods. We don't do them after every game. That wouldn't be really efficient. So maybe we do it at the end of the month, and we go to, 7 games in a month, 8 games in a month, however many games, home games that month, okay? With respect to the Yankees, they do the same thing. They record an adjustment to the liability because they have a $50,000 liability at the beginning, but that amount will go down over time, and they do their adjustments at the end of their accounting periods, which, let's say it's every month. They adjust again for those respective games that have been performed that are no longer are considered a liability. So 5 to 7 games, whatever it is, for another month. 7 to 9 games, whatever it is. So that's really what's going on. It always helps when you think about both sides of the picture. You might be asked on an exam or a concept or a test or whatever it is, or just in business practice. You might be asked about one side, but it always helps to understand the other side when it comes to adjustments. because there's this corresponding aspect, kind of like a matching idea. So always keep that in mind. It always is going to help you when it comes to adjustments, because adjusting entries are very difficult when you're first starting out in accounting.